Hello guys, good afternoon. Today is August 23rd. I'm going to be recording a little bit of a resume of today's price action, the things that showed up, concepts, and everything that is basically worth mentioning. And today I was able to catch a pretty good trade that you were already able to see. I published a video a couple of hours ago, and I wanted to go over the things that occurred. Why could have we expected a bullish day? Why could have we expected a bearish day? How could have we taken advantage of the buys or maybe even the sells, and so on and so forth. So, hold on, is this? Yeah, that's fine. So let's just get on with it. And midnight didn't really do much, right? Oh, I actually did a lot. My bad. Is this right? Yeah. So before midnight, we had basically a range that left liquidity up. As you can see, so you can see here, price was just built on liquidity. We could say that that previous high and all of these highs, right, were swept by that by this high, basically. We could have said that then turns that into a bearish trend, which, sure, to be honest, that could have been a pretty good way to see it. But in my opinion, looking at it now, we could easily say that there wasn't much of an impulse after the sweep on liquidity, and price basically just rejected around this level a couple more times, right? You can see how we had that level, price basically goes through it a couple of times, but then just continues to respect it, causing that move lower. So for me, it was more like it basically respected this entire area for a lot of time, then continued to lower, creating liquidity, or create an interest in this level that could have been used as liquidity later on. That, surprisingly, as you can see, price actually didn't take that, which is also something that could happen either through Asia or through post. Oh, my bad. Yeah, it definitely took it. I thought this was the impulse of the session. Okay, so as you can see, price ended up taking that, so it rejects or reacts, better said, to this level, right? Just creating more and more liquidity, which honestly, I don't think I had seen that, but that would have been not a much better, but definitely something worth knowing or realizing that we had such a clear level being respected over and over, and this entire thing was just definitely that. So, the reason why I thought this could have been a bearish session or a bearish day is due to this, mostly. Because, as you can see, London basically went lower, didn't really take that much liquidity. We do have this couple of flows that were created, or even this couple of flows here. Aggression higher, which in my opinion, all that it really does is take some liquidity. And then we don't see much displacement until this is broken, respects this, continues lower, a little bit of a range. So here, I was expecting the continuation lower, basically, right? So this is one of those days that in the past, and I don't want to say in the past because it's not like it's an issue that I've already resolved in my trading. But as an example, what I tend to be is very biased with the direction. I tend to be very biased with the direction. So as an example, if I say that if I analyze price action during the weekend or during a Monday, as an example, just getting ready for the week ahead, and I realize that we have a very potential bearish trend due to the fact that we've either been very bearish lately or we've just run about buy side liquidity, then I could definitely expect a bearish continuation, right? And to be honest, that's something that is an issue that I've kind of grown above or just kind of left in the past, but at the same time, something that still happens every now and then. So I don't really want to say much in the past, but what I'm trying to explain here, or what I will try to explain, is how do we really go from thinking that this could be a bearish day to immediately changing that bias and looking for buys, as an example, as it was today. For me, it's a lot about understanding the details, right? And it's something that it does take some time for me to realize in some occasions. In some occasions, I do realize immediately, or I just risk it and say, okay, so this may be a reversal, or at least a reversal for a retracement to then just continue lower, as an example. And in some cases, I just say, no, this is just a retracement to then go lower, so I'm not going to take the buys, and I'm going to wait for the sells when they show up. I'm just going to take them, right? Pretty much. But lately, what I've been doing is just trying to pay attention to details, by trying to realize what's actually going on, right? Because in some cases I say, okay, so this move higher was a sweep on buy side liquidity. So now I'm expecting sells. But at the same time, something that I could have missed out in the past is this. There's a lot of sell side liquidity, pending there with a fair value gap that just took liquidity. Right? You see it that way and you say, okay, so yeah, sure, I'm definitely going to be looking for buys here if it came to that. And then when this happens, you have what? Let's actually just clean this up. What is that we have on this one? On this one, we have a clear run on sell side liquidity. Immediate displacement generates fair value gap, causes a market shift. And that's our entry. That's where I took the entry today, as you were able to see. So again, how do we, as an example, how was I able to not be biased today, expecting just sells, and just said, okay, so we do have a bullish opportunity here. Let's try and take advantage of that. So the way that I did it is it's because of multiple reasons. And what tends to bias me more than anything else is what happens through London. Because through London, as an example, in some cases we're going to have something somewhat clear, like something like this. I suppose we have a high there, London begins, goes higher, takes a lot of liquidity, and then we have this, right? So let's suppose pre-New York does something like this, just continues with the trend. So what is it that we're going to be expecting on this day? Well, based on stuff from London, it swapped a lot of liquidity, immediately displaced, fair value gap were respected, fair value gap in here, tiny round liquidity. All that we're going to be expecting through the session is a run on buy side, continuation of the trend, and that's it, right? And today we could have thought that, as I mentioned earlier, due to the fact that, well, this move higher did sweep liquidity, but if I would have paid a bit more attention, we can easily realize how I actually respected this level that was just being respected over and over, and that was just liquidity for price to, well, do this, right? So the way that I do it is identify what's going on, what is the side that is giving you the clearest price action, the clearest confluences, and what is it actually doing, right? What is it happening? What is happening, right? Because let's just go back to this. So this is a specific price action, which is when I did the analysis. And the reason why I did the video, honestly, is because I feel a bit freer, or a little bit more free, basically, when I'm talking like this, right? I feel like I can express myself a bit easier. So instead of just doing like talking by myself, I decided to record the video, and it actually turned out quite well. And basically, it's just, what is it that we're expecting for the week? We're expecting a various direction for the week, right? So just because of that, we're definitely going to give it a little bit more importance to that bias. But what do we have in front of our eyes? So we had this impulse, which is caused by news, which did sweep some liquidity, but also created some liquidity, which means that there's pending buy side liquidity up there, but also some has been taken. So if prices start to go lower from there, it didn't make sense as well. What happened afterwards? A little bit of a range, continuation, some displacements, not many. We do have this tiny one here. Retracement that continues to be respected. Tiny bit of a range through phase one, and that's when the liquidity and the details come into play. Because as an example, can we say we have buy side liquidity? Yeah. Can we say at this point, right? Let's just suppose we're at that point. Do we have sell side liquidity? Yeah, we do. So we have a range. And with ranges, you have the fact that there's liquidity on both sides. So price at any point can just break out, and continue. Or break out, retrace, and continue. As kind of happened today, because today was breakout, continue, right? Bit complicated for that. So that kind of helps because, well, it's clear liquidity that is being just manipulated into the market, but in some cases it can be a bit difficult to understand what's really going on. So what did it for me today was the fact that there's a run of sell side liquidity here that creates displacement, and the market shift does take a lot of time, which is not ideal, but ends up happening. We have the run on buy side liquidity, which is what we were expecting if we're expecting sells. So what happens afterwards? What is it that we expect for price to do afterwards? Afterwards, we want to see 5 minutes to create a displacement. 5 or 15 minutes. Today, the 15 minute was useless on this range here. I'll show you in a second, or you can check yourself. You can check the charts yourself. But we have the run on buy side liquidity, and the fair value gap that we get is this one. So cool. That's great. Now we can actually go for that, right? Yes, that's when my something that I do a bit different from ICT is just I go to the lower time frame, look at that fair value gap, and look for and wait for the confluences. Not saying that I do it better than ICT, in no way, but this is something that has helped me avoid a couple of losses. And instead of just taking the 5-minute fair value gap, also a little bit of a better risk reward ratio. As you can see, at no point do we actually have a move lower that displaces and creates a fair value gap along with the market shift. We do have the market shift here, but there's no displacement. That's the only reason why I didn't sell today. Oh, well, not today, but on this price action specifically. So going back to, let me actually show you the 15 in the meantime. So you can see, completely useless, no fair value gap at any point. Not worth at all. So I'm looking for sales here, right? Price starts going higher. We can see the impulse, bit of a range, doesn't create fair value gaps to sell. And if it does, well, we could have taken a loss and that's it, right? But what happens later? We have a market shift. What can we see as well? This is why I do like having the multiple charts at the same time, as ICT says, to have like an example of 5, the 4, the 3, the 2, and the 1. I only have the 5, the 15, and the 1, although the 15 from time to time, it's like I don't really enjoy having that one because it takes a lot of time to actually create something. But the thing is that at that point, we're seeing a lot of regression on the 1 minute. There's no sign to sell, and the high is actually taken. And what happens immediately after, or not immediately after, but what we can see at this point, or what we could have identified a bit earlier, is that sell side, a lot of sell side liquidity has just been taken, and immediately afterwards we have displacement higher, creating a fair value gap in the 5 minute, and the market shift, which is exactly what I look for. What is it that I look for? I've said it many times, but I do like repeating it because it helps me as well. Displacement, sorry, not displacement, run on stops, so liquidity. 2 will be market shift. And let's put an I. Okay, and market shift and displacement. Sometimes I use displacement as a fair value gap, but so displacement as equal to fair value gap, but it's not really the same, I think. And 3, fair value gap. Right? That's exactly what I wait for. This is exactly what we got today. So that's what I wait for. First, the run stops on stops. Second, immediate fair value gap, or sorry, immediate displacement along with the market shift. And third is the fair value gap, or well, lower time frames trading inside that fair value gap. And then the lower time frames, I look for the exact same thing. If we have market shift and run and sell side liquidity in this case, or run and stops as well in the lower time frames, which we did get today, then great, even a bit better, right? Overall, what is it that we have in the lower time frames? Liquidity, clear run below them, market shift, call it whatever you want, and fair value gap. Exactly what we had on the 5 minute, we got in the 1 minute. So going back to the beginning, why could have we expected buys and why could have we expected sells? We could have expected sells due to the various expectancy for the week, right? The week's forecast. And besides from that, not much more. And the run on buy side liquidity, which again, what does that run on buy side liquidity do really? It takes liquidity, but it also creates a good amount of liquidity, right? Because it's still respecting this level, which basically means that price will get there eventually. What also happens here, we do have a little bit of liquidity. So you can see price basically respects the trend line once, twice, 3 times, doesn't even get close to it, and then immediately breaks it, which means that there were a lot of sell stops from this point. So stop losses maybe here, or maybe about this high, maybe all the way up here. And then at the same time, as it is theoretically a flag, a lot of buy stops up here that will then got taken to continue higher, right? So could have we expected sells? Yes, I was expecting sells. Could have we expected buys? Not entirely, but we do have the fact that again, this ended up acting as liquidity. Sweep, displacement higher, market shift, fair value gap, price trace into that, tiny run on sell side, tiny run on sell side, displacement, lower time from entry on 5 minute, and that's it. That's exactly what happened today. So again, could have we expected buys? Yes. Could have we expected sells? Yes. would have it been complicated to identify one side or the other? Kind of, but at the same time, again, paying attention to details, to the fact that, well, the 5 minute has this place here, has caused a market shift. Why did that happen? And could we take advantage of that? If we realize that there's a gap in the 5 minute, then we can understand that maybe that gap happened because of something. And we see the sell side. Oh, so there's a gap that was created after price actually swapped sell side liquidity. What also happened? We have a market shift. So that's an extra confluence, not an extra confluence, actually something that we look for. So what is it that we should look for now? At that point, it's not much else that we have to look for, just a lower time frame entry. Or if we continue to look for details, oh, there's a fair value gap here. Why was that fair value gap created? Look to the left, run on liquidity, immediate displacement. Market shift, again, takes a bit of time, as it would have ended up here, but well, that is what it is, right? Overall, happens, and the fair value gap isn't mitigated until the market shift happens, so overall, that's great. And that's pretty much it. I don't really think we got any clear entries afterwards, because, well, price had impulsed a lot already. And that's pretty much it. That's my resume. That's my analysis of what happened today. Oh, and almost forgot. Let me check the daily first. Yeah, no, we haven't mitigated any fair value gaps. But as you can see, we had this pretty impulsive price action. Could we say that the entire thing is all the way up to this? Yeah, could we say it's all the way up to this? It will always depend on the time frame overall, right? Because we could say that this was very minor retracement, so let's just use it all the way up there. For me, it's not that much. I mean, this is the Fibonacci that I would use for a 4-hour chart, maybe the daily, but for the 1 hour, the 4 hour, something like that, probably the one we saw here was enough. This one, from this high to this high. For me, that was good enough. Could have we gone for something a bit further? Yes. Would have it been mitigated? Yeah. What if I use it as a target? No. It's just a lot of impulse. I was not expecting that much impulse, and it is what it is. Also, look at that. The 1 hour market shift. Fair value gap. More reasons to potentially look for those buys, right? And yeah, that's really pretty much it. It was a very interesting day. It has been a while since I actually took a good trade on challenge unfunded. It's just not ideal, of course. Paper trading I have been doing quite well, as you've been able to see on Telegram, on the videos and everything. But challenge unfunded, we have taken some time to actually show those good trades, as I've been in a little bit of a rough patch. But I'm starting to get over it, and I'm pretty happy about that. And as you can see, it's paying off well. And yeah, honestly, that's pretty much it. Gonna go over the basics. Which is, even here in the 15, we can see the liquidity on both sides. So my entire strategy, or my entire way of taking entries, is run on stops, either buy side or sell side, immediate displacement with a market shift. And in here, that's what I'm looking for, the lower time frame entry. The lower time frame confluences. The exact same pattern maybe occurs, just in the lower time frames, right? The 1 minute, in some cases, if price doesn't mitigate the 1 minute immediately, I go to a 2, just in case there's something building up. And same happens if the 2 isn't mitigated, I go to a 3, and so on and so forth, right? And that's my entry. Now, what else do we add to it? Well, we add the fact that if we're expecting a bearish week and it just run about buy side liquidity and then the 5 minute fair value gap is created, then that's a little bit better, right? Overall, that's a little bit better because it's going in favor of what we're expecting for the entire week, right? Just as yesterday, right? Overall, and Monday. And yeah, we're getting the confluences to follow that trend that we were expecting. Now, if something like this happens where we have confluences to go against what we're expecting, it can be a bit more difficult, but did we have enough confluences to go for that trade? In my opinion, we did. And also, as I mentioned in the video where I was analyzing to either to take this or not, we can see how price has been going quite aggressively to the downside. So a retracement was needed one time or another. Could we have a bullish week from this point? maybe, or maybe just another day to mitigate, as an example, a daily fair value gap. That will be ideal, my opinion, to then just continue with the bearish trend and finish Friday maybe somewhere around here, right? For me, that's really all why I took the buy, why we could have expected sells, why we could have expected buys. It was a very interesting session, which I'm very happy turned out well for me, and I hope it turned out well for you all as well. And that is really all that I can talk about for now, or that I wanted to talk about for now. I hope you enjoyed. I hope you had a nice session, and I'll be seeing you on to the next one.